Today we're going to be looking at Hedera, HBAR, right? It is the end of January 2026, and it was a rocky start to the year. So what we're going to do today, we're going to pull up the chart. We're going to look at a couple key levels. We're also going to be looking at updated price targets for the full year of 2026. And we will be talking about some catalysts, which we found in the news, including the Canary Capital ETF. So if we pull up the chart of HBAR, I've got this thing zoomed out as far as TradingView would let me go. And when we are experiencing dips like this, where we've broken key support levels, we have to go look back way in the past. So what we're going to do here first is, we're right now, we broke 10 cents, barely, but we did. We're 9.9 cents. And we're testing these extreme lows. So what we're going to do is we need to take an analytical approach here and kind of see what we're looking at. So I'm going to start with some Fibonacci retracements. And we're going to go all the way back to what looks like a main level of support, dating back into 2023. And this is right around 4 cents. So I'm going to go from the low up to the top peak that I can find and see what we got here. All right, so we can see we were at 4, then we just took this massive spike, around November 2024, came all the way back down, and now we've broke this key 786 retracement, which was 11 cents, and we're falling. So we're in this no man's land as far as the big time chart that goes all the way back to October of 2022. So right now, if we look at this chart, 4 cents is in play, but let's take a little bit different look here, and let's move into the April 2025 lows. We can see we have two. I'm going to zoom in here a little bit, guys, so you can see it. We've got 2 candles right here and this long tail from October. So we'll just call this three times where we dipped down and kind of had some support. So something is telling me that this is an important low, and we can use this to do some Fibonacci retracement analysis. So I'm going to overlay this right on top of the one we just drew to see if anything lines up. So I'm going to start from low, which is 12.6 cents, and we're going to go up to the peak from July 26th in 2025. So we go here, go up to the peak. Okay, so you can still see we are in this no man's land. We're in the no man's land from 12 cents, and we broke that. So now we either need to look to reclaim the 12 cents, or our next target to the downside is 7.7 cents. If we hold that, sure, we might see a rebound. If not, we're looking at the 4 cent floor from the big time chart, the one that goes back to 2022. So those are our levels, guys. I'll zoom in a little bit here just so we can get a closer view. Okay, this is the shorter term one. So we've got 12 cents to 7 cents. That's the range we're playing in right now. If we get above 12 and you may be above this short-term high at 13 cents, yeah, maybe we can get up to this next level, which is 16. But the way it's looking right now, you can see there's a candle here and a candle here. That was at that 10 cent level. We sliced right through that, and now we're in the 9 cents. It looks like the trend is down. And if it's down, 7.7 cents might be our next target. So that's a quick snapshot of the chart. Again, when we have big events like this, it really helps if you zoom out and get a complete view dating almost as far back as your charting software will take you. You can see we got a pretty good look as to what was happening, and we can even play around here. Let's just play around one more time before we hop into the news. Let's just see how, if you've never done Fibonacci analysis, AI and bot traders have this programmed in, so you can see sometimes it works out perfect. So if we go from this 18 cents to right here, the 4 cent low, we can see this is 40 cents. It got up to 39.9 cents. So even from this high, which was on Thursday, the 25th of April, 2024, to the 4 cent low, we went straight up and almost tagged this 2.618 Fibonacci extension within less than half a cent. So this is powerful, not just because charts adhere to this, but because trading bots and algorithms use it. All right, so with that being said, there are a couple major news stories that could serve as catalysts for Hedera moving forward in 2026. Let's take a look at those. First up, we have the Canary Capital ETF inflows. So on January 21st, 2026, the Canary Capital HBAR ETF recorded $3.3 million in net inflows, bringing its total holdings to over 521 million HBAR. So guys, this is a clear signal. Like, what does this mean? It's a clear signal. Buying the blood, right? They are buying low. And while retail traders are exiting because we're scared, there's some legislative drama in the Senate. Okay. Interest rates are scaring. Silver and gold, all these things are retail is asking, oh, should I get out of Bitcoin and buy gold? Well, look what happened to gold and silver today. I mean, the silver ETF was at 109 and now it was like broke 90 bucks. And retail probably got out, sold at the lows, bought gold and silver at the high. Now it took a dump. Now they're going to lose that money and buy it back. Okay, so this is the institutions buying the blood, buying the retail panic. So this provides a structural floor that wasn't present in previous cycles. Having an ETF gives us a floor. They are buying. Story number 2, mainnet upgrade. Hedera successfully deployed mainnet upgrade version 0.69 on January 21st, 2026, which focused on optimizing consensus reachability and node stability. So this was a routine upgrade, but vital. For enterprise-grade clients like Repsol and Dell, network uptime and performance predictability are non-negotiable. This upgrade hardened the network for large-scale, real-world asset tokenization projects, right? And these are coming in mid-2026. They're on the books. They're coming, and this upgrade was necessary. And story number 3, guys, America250, the official partnership. Hedera has been named the official digital experience partner for America250, which is the United States semi-quincentennial celebration. This is kind of just a mainstream visibility play. Beyond the crypto bubble, this partnership involves high volume digital storytelling and credentialing. It demonstrates Hedera's ability to handle government adjacent scale, which is a massive validator for the governing council's long-term roadmap. It's free marketing, right? It is free marketing, and people are going to understand and finally realize Hedera's on the map. So now that we talked about a couple catalysts that are in the news, let's just revisit our price targets for 26 and see what we got going on here. I mean, with the recent sell-off, the price targets are slightly adjusted, but let's take a look. My bear case scenario now for 2026, since we broke that 10-cent support, we're looking at 7 to 9 cents. And that 7 cents, if we remember, was a Fibonacci retracement from the April, I think it was the April lows to the November highs. And the 7 cent was a retracement there. The base case though, guys, right? Maybe we get the Clarity Act passed, we get favorable macro, interest rates participate, inflation participates. We're looking at 18 to 26 cents. We break out of this slump, retail comes back, the ETFs help out, and we would just reclaim those levels. HBAR and Hedera, sign some more partnerships and get some projects actually in production. And the bull case for the year, guys, we're saying 45 to 62 cents. This is a lofty goal, but this would be contingent on the spot HBAR ETF approval by Grayscale and full-scale real-world asset deployment by governing council members. All the dudes and the guys on the governing council would launch full-scale real-world asset projects utilizing Hedera. We would see the AI and the verifiable compute using Hedera. I even have a video coming out on Sealcoin, which is the space-based token which uses Hedera. So they've got a lot of partnerships in the works, and once they start rolling out to production scale, that price is going to follow. So HBAR, in conclusion, guys, it's currently, we're sitting in a global crypto macro fear, but we also have a lot of institutional accumulation with all of the ETFs that have come out. HBAR, Avalanche, Chainlink, Bitcoin, Ethereum, right? I probably missed a couple, XRP. But the technicals, if we look at the technicals, it suggests we're hopefully building a base. And a decisive break above 13 cents is going to be required to flip the narrative. So what's your move? Let me know in the comments. Are you accumulating this at 10 cents? Or does the break at 10 want to make you wait for 7 cents. Okay, let me know your target in the comments. And again, guys, thanks for watching. This was not financial advice. It was just for education and entertainment. This is Luke with Ledger Prime, and we'll see you in the next one.